Bitcoin is getting ready to make yet another massive move. Just a few days ago, we were talking about buying the dip in this $68,000 region with a medium level certainty, meaning that if the price went slightly lower, I would have actually opened a trade with significantly more weight. But it's not a problem because in the grand scheme of things, right now is where things are starting to get interesting. As you can see from the chart in front of you, we are forming a bullish symmetrical triangle with obviously a little bit of room to go sideways still if we get rejected right here, which on the short term looks as if we just did. But again, this is very short term. And honest truth, it's been kind of funny when looking at all of these different candles and what caused it. For example, I believe that right here, we had ourselves the Coinbase news that the SEC versus Coinbase lawsuit was going to proceed and that Coinbase's motion to dismiss was thrown out. But before that, prices were soaring up pretty significantly. And right here, it seemed to be KuCoin getting into some trouble with the SEC, which brought the price from 70.6 thousand all the way down to 69.3. And then right here, very recently, it was actually Sam Bankman-Fried getting sentenced to a whopping 25 years in prison. And even though I expected that news to be quite bullish, and I still kind of stand by that, the market did take it quite negatively, or it was just, as we can see right here, a rejection at previous levels. And these levels are actually very much more significant than might meet the eye for two reasons. Now, first of all, you might have already seen the articles today, but Bitcoin and Ether could witness upside volatility as $15 billion worth of options are expiring today. Dealer hedging could breed volatility at around 70,000. Quote, these levels are higher than usual, which can also be seen in the low max pain levels. The reason is, of course, the recent price rally. Higher levels of ITM expiries might lead to potential upward pressure or volatility in the underlying. But so it seems the majority of the pressure is with regards to 70,000, not 71.5. So what's up with that? Well, as a lot of Twitter users were pointing out, this has more to do with the leverage around there. Coach had this to say: no one is talking about this, and it's kind of crazy. Just yesterday, between 69,000 and all-time high, there was $4 billion in leverage. A massive chunk of that leverage was around the 69K range. Now, what is the number one rule in the market? Price seeks liquidity. The liquidity is in the areas where there is leverage. We casually saw almost $300 million in liquidations in the past 24 hours, and that was mild. We'll see Bitcoin naturally move to another area of liquidity, which is above 74,000. Will it happen today? Maybe, but give it time and stop being so damn scared of these dips. We're here to make money, fam. And I think on the very short term, it's also becoming quite obvious the range that we are trading in and why that's been the case. But the simplest part here to explain is that this range here between about 71.5, 71.8, let's say, and on the bottom, I'm going to say about 68,000 is like a free trading range of sorts, where any move above 72 is going to cause some significant ruckus in the markets, in my opinion being mostly positive. But really at 74,000, where things could go absolutely crazy, as obviously that is the previous all-time high, and that is the level that everybody is looming. And so usually this last edge is, or could be, quite difficult because people know right now over the past couple of days, we've been uptrending again ever since having a pretty good dip last week. And so it's only time before we break through. We've been hit with negative announcement after negative announcement after negative announcement. The last one is debatable, but 3 dips in a row, 3 days in a row as well, yet the price is still trending upwards. On the short term, just broke out, hitting that same threshold as before, which when zooming out really doesn't seem like much of a threshold though, like much of a pressure point. Just looking at this chart, the only point of interest that we could pull out here is from this 11th of March to 15th of March, the fact that we had our opens and close quite often around this level. But generally speaking, this seems to be the last line of defense before seeking up that all-time high. And so the trap, if you're wondering where it plays into effect, is thinking that just because everything is pointing towards the whales seeking out that liquidation and us pointing higher, on the very short term, there are a couple of scarier marks that, again, once we get some slight bullish confirmation, we could kind of throw out the window, but on the short term could lead us to some slightly lower prices before inevitably breaking through the clouds. So long story short, we're expecting more upside. There's a couple of negative triggers though, and that's why I'm doing this. I told you guys about my entry within this little zone, right? With different targets. I will extrapolate and add one more. If we go below $68,000, I'm opening a very significant Bitcoin position. Very significant, very significantly long. If you're looking for different opening targets, I spelled it out. 68.8, 68.5, for example, 68.2. You could even do one at 67.9 to get your extra confirmation if you want to pull it slightly lower. If you want to play it safe, you act with a stop loss, because if we fall, there's a lot of room here. And we know from past bull markets that some deeper corrections sometimes do occur along the lines of 30%, for example. And what we witnessed here throughout the last couple of weeks was only 18%. A 30% correction would lead us all the way towards like 51,000. But then again, this type of price action that we're seeing right now is very similar to the price action that we saw back here in 2020, the moment that we were breaking through the all-time high. This chart here on Femex is not too amazing for it, but just trust me when I say that the price action we're seeing right now with, hitting the all-time high, then kind of bobbling around, but then some massive candles afterwards is, pretty on par with what we're seeing right now. So still quite bullish. That's why I have my position open, obviously, but I will add significantly if one of these scenarios were to happen. And unfortunately, I don't think we'll be revisiting these previous levels anymore. But if we did, then that would be amazing, because that would mean some juicy entries for me. Anyway, guys, if you're looking for platforms to trade on, I've got some links down below to OKX, Bybit, BitGet, and perhaps a couple of other ones like Deepcoin. These are just places you can trade on. If you'd like a deeper tutorial, I've got one link down below for how to trade on Bybit, and it kind of works the same on all these platforms. But if you really want to, I can also go ahead and create some separate tutorials for all of these different platforms and also explain more about my bot trading. If you guys are interested in that, let me know down below, and I'll see you guys again in another crypto update.